Good day to one and all. This is Dr. Sivaraman of IKnowIndices.com. Hope you are able to hear me. Good morning to everyone. Thanks for welcoming me. Sorry, I was engaged in some other work, so I could not present the Asian session webinars for nearly about 5 days. So anyhow, I'll start from now. Let me display the PowerPoint presentation. Asian session live market analysis on August 9th between 5 and 5:30 GMT. We will track the market using the live market code page. I've given the link for the same. I'll focus the camera over that of the live market code page. So currently you can see that Euro is trading around 1.4225, 1.4227, 1.4153 is the low, 1.4245 is the high, and market is in the middle level, and currently it is showing 47 pips positive net change. In the case of JBB, it is trading around 1.6333, 1.6337, 1.6269 is the low, 1.6335 is the high, and 16 pips positive net change is seen. And yen is showing about 50 pips negative net change. All the currencies are making very big moves on the upside as well as the downside. So this is the influence of the multi-year moves. So that is why you come across big moves start on a daily basis. So now it is yen is trading around, USD yen is trading around 77.23, 77.26, 77.06. Low 77.84 is the high, 50 pips negative net change is seen. Then USD CHF, which is making the new lows all the days, and it has come to 0.75151, 0.7518, 0.7488 has become the low, and 0.7556 is the high, and 32 pips negative net change. And so in the majors, you come across the USD weakening move during this particular time frame, but during the start of the Japanese session, all were showing the USD gaining moves, and then subsequently they have made the swings and showing the USD gaining move. But coming to the other commodity pairs, they are showing the USD gaining moves. So Canadian dollar is showing around 0.9953, 0.9957. 0.9915 is the low, 0.9996 is the high, short, 4 pips short of the parity, and it is showing 11 pips positive net change. And Australian dollar came down drastically below that of the parity, came down to 0.9929 and bounced back very quickly from there to 1.0121, 1.0125, and the high is 1.0207. They come to the middle level between the low and the high, and currently showing 63 pips negative net change. So as far as the commodity pairs are concerned, they are showing the USD gaining move, and their majors are showing the USD weakening move. So this is a multi-year trend reversal time frame. You will come across such big moves happening in the market. Be careful. And I was expecting initially a trending upward move, and then found that they started unwinding all the currencies which they have been accumulating for a long time and taking to the extreme levels. So they are done with regard to that of the commodity pairs. You know, in the sequential trend reversal, you find the commodity pairs reverse first, then subsequently the yen crosses reverse. So they are doing it now, and they will also gain very big after the drop. And afterwards you come across the majors are expected to make the reversal. But majors have not gained much, especially Euro and GBP. So the drop will also be limited, about 200-300 pips. Not much big drop is expected because they are making the wide range swings in the case of Euro and GBP, and subsequently they wanted to take up the denominator currencies which are showing the multi-year moves now. So from that of 76 area, USD yen could be recovering very fast, and also from that of 75 area, 0.75 area, USD CHF could recover very fast. They are all showing the multi-year lows in this, and also corresponding crosses. You find that Euro CHF is showing the multi-year low of 1.06 area. They will also reverse, and Euro GBP, they have been holding it and only Euro CHF and GBP CHF, they have been making extreme moves among that of the European crosses. They will also come to that of the normal levels, and you will come across similar to that of the moves what we have seen in the case of Australian dollar, a very quick gain. And in the case of in the market, the gaining takes a longer time and the drop happens in a few days. And this was expected by the month end, the Australian dollar coming below that of the parity, and instead it has happened, and after the completion of the first week and the start of the second week, they have brought it down. So this is what they try to do it in the market during that of the multi-year moves time. So that is why in anticipation of that I gave, but they went straight from 1.08 to 1.10 in the case of Australian dollar, and everybody started shouting at me. So I kept silent because I will not be able to give against that of everyone's expectations and strongly the moves. And when the market is making even 10 pips higher, then people were really making a lot of comments, and then probably they would have realized that the forecast might get delayed, but you do come across that happening in the market. Now anyhow, coming to that of the expected market moves for today, let me just focus the camera over that of the PowerPoint presentation. So during the Japanese session, swing and slide moves are expected. So they are just making the swings and dropped and gained, and all such volatile moves are swings. So it will be an unusual time. So a swing might be of about 100 pips. Keep it in mind. That is how they will quickly make whips or moves. Small traders, it might be very difficult to withstand situations. And if you are disciplined trader, try to keep stop and try to keep stop at entry and try to quickly book profit when they make sudden moves in the market. Knee-jerk reactions are going to be there in the market for this week and next week, and this is coming out of the multi-year levels in the case of Australian dollar and also the denominator currencies USD yen and USD CHF. And Euro and GBP will be floating in a range bound or in the wide range, and also Canadian dollar will be making range bound. Of the four majors, Euro, GBP, USD yen and USD CHF, Euro and GBP in 2008, they made the multi-year moves, and then at that time USD CHF and USD yen were making wide range swings. Now this time they will make the Euro and GBP to make a wide range of 300 to 500 pip swings, and the denominator currencies USD yen and USD CHF, they are going to come out of this multi-year lows level. And with regard to the commodities, there are only two commodity pairs. Last time, Canadian dollar came down to that of 0.90 when Euro and GBP were doing. The Australian dollar was making wide range swings at that time. And this time around, Canadian dollar is making the wide range swing, but Australian dollar made the extreme multi-year moves, and that is also now come to that of the reversal. In the sequential reversal, you find the commodity pairs reverse first, then the yen crosses, then they will make very big moves. In the case of majors, you will find about 200 pips drop and 200 pips rise in a single day. That sort of moves they will try to make it, and probably even GBP could make a very big move of 250 pips on the downside and 250 pips on the upside on a single day. That sort of moves could be seen. They could do it very aggressively in order to change the trend. And finally, the European crosses. So in order to bring in very big moves in the case of European crosses, they will act wildly in the case of Euro and GBP, probably a very big drop in Euro and very big rise in GBP. That sort of moves they will make to bring in all the reversal in the case of the European crosses. Then afterwards, you will come across the trending moves, and during this particular process, there may be a brief shift in trading zones in some of the currency, especially the two denominator currencies, USD yen and USD CHF. They will have a definite shift in trading zone on the upside, and Australian dollar shift in trading zone on the downside, and the trade below that of the parity, and now they are pulled back to that of 1.01, and they are expected to come down again during this particular week. and you'll come across further downside could be seen in the case of Australian dollar, and further upside in the case of Canadian dollar as a non-stop move, and probably they may halt it around 0.88 in the case of Australian dollar. This is only an estimate, and don't go by it straight away. This is only a mathematical calculation. So Australian dollar can go up to 0.88 and Canadian dollar can come up to 1.03 level in this particular move. So avoid taking the opposite side move. That's what I can suggest. Now coming to that of the initial lows and the highs, euro I gave only on first the webinar and then 9th and coming back again. So euro is trading around 1.4153, 1.4227 and 1.4227. They reached and formed 1.4245, a brief upward soften, and then subsequently they are holding around that of 1.4230. And as I explained that European session, they could firm up and then drop. Probably euro they could make further upward soften and then make a drop. And GBP, the initial low was 1.6269 and the high was 1.6335. 1.6335. They breached by 10 pips and formed a new high 1.6345, and now currently trading around that of 1.6337, just around that of the high. So they could make an upward move, and you know that whenever they cut the high and stay above there, they could stay there for more than 2 hours, around 2 hours, and then make the continuation of the slide. And in the case of CHF 0.7488, the low that has not breached, they I think made a quick downward move and hit. And yesterday, you know that they made a very big drop in the case of USD CHF and Euro CHF, and they are all the multi-year moves. And so any level you try to take a buy, they will try to hit. And that sort of euphoria or the panicness they create in the market, and people won't be knowing what to do. And that is a condition. They probably pull out the money from one currency and put it in the other currency and lose again there and pull out the currency and put it in another currency. And in the process, during such multi-years thing, nobody becomes benefited. Even those who just made very big profit in the case of gold and things like that, they might probably buy it at a higher level again after making a big profit. And then when the market drops very drastically, they could lose all the earned money. So this is nothing but the perception. So the perception continues to change in the market, and people may say that trillions of dollars have eroded from that of the market and things like that. They are all nothing but the perceptions. And the money, physical money remains the same, and only the valuation changes from time to time. This you have to keep it in mind. In USD CHF, the high was 0.7556, and there again, they have not breached the high or the low, and currently it is trading around the middle level 0.7516. You could come across sudden knee-jerk reactions, and they may call it as an intervention or whatever it is. And finally, you'll come across CHF could also come very quickly to that of the parity. And so this is nothing but a calculations, and it can go wrong. Please keep it in mind. So when I say it can come to parity, don't immediately, when it drops another 100 pips, don't blame me, because mathematical calculations can go wrong, sir. Then with regard to yen, 7706 is the low that is not been breached, and the high is 7784. And again, yen could make a very aggressive gain, and we might see soon, probably in a matter of 1 month or 2 months, yen coming above 100. And we will come across all currencies trading in the normal trading zone afterwards, after this particular multi-year stressful condition what you have come across in the market. And Australian dollar formed 0.9929, and there's the low and 1.0207 high, and currently trading around 1.013, 1.0133. They could make very quick either way moves, and again we will see Australian dollar coming down. And once the low is been breached, every time we'll find that sudden drops happening and pullback, sudden drops happening, that sort of moves, and finally settle around that of 0.88 area. And then you'll come across either way moves in the case of Australian dollar as the normal levels. And Canadian dollar also, it has come short of 4 pips. to that of parity, and you could come across today or tomorrow that it breaches parity and make very big rise. And as I explained, that it could go up to that of 1.03 area, and try to avoid doing the counter trade here. And when they are making a quick drop, try to buy, and when they gain the commodity pairs, book profit. And as far as the majors are concerned, do either way trades, and don't think that they will make a very big drop or a very big rise. They will be in the range of about 300 to 500 pips. Any level you have got a buy or a sell. If you wait for a few days, you'll be able to book profit. That is a condition you may come across in this particular week and next week as well. And you will find that all the market coming to that of the normal level, what you have seen in 2002, 2003, etc., by next month. So you refer to those levels and probably make a note of it and see how exactly those levels are now being shown in the market in the month of September. Let me minimize the PowerPoint presentation and take up the questions which are asked here. Meanwhile, I'll focus the camera over that of the live market code page for our reference. Then KK. Good call on Australian dollar when everybody was so skeptical. See, forecast is the one which is supposed to give that sort of information. But in between, you do come across some noise. And whenever there is a breach of the chart, people say simply noise and people are willing to accept it. When there is a deviation from that forecast and people start yelling at me, and I don't know why it is. Then Francisco, do you think that a very quick drop in Australian dollar might be an opportunity for a buy or a sell trade around 1.01? When market is stagnant, you don't try to take position. And when they quickly gain, so from 0.9929, they quickly gain the level. At that time, you could have done a buy and sell trade, quickly exit. Now they are holding around, and market will be changing the levels very quickly in this time frame. So you will not find that it is stagnant, and it will continue to change the levels. And during that time, when they gain about 30-50 pips, and watch that they are coming up to that of the high or what, and not or the intermediary level like 1.0150, and how they are handling it. Because this is all nothing but the either way stop and moves to create the uncertainty to that of the traders at the time to try to take a sell position. As I explained, Australian dollar, you can only do sell and buy trade, but use hedging to limit the risk. And once the position is hedged because of the high volatility, you just see that you are able to keep stop at entry in the hedging and see how far they are going it. And afterwards, stop cutting that particular level, then try to close the hedging with a profit and keep 30 pips above under the hedging order. See, this sort of time, you can keep away from that other market if you find that volatility is something unusual. But also you can view it as a great trading opportunity. If you have the hedging facility and you are able to, in a disciplined way, use the hedging at any given time, you take chance only for about 30 pips. The risk for only 30 pips or 35 pips. Then you will be able to effectively earn on either side without any market fear. And for that, you have to keep immediately when the hedging is making profit, keep stop at entry. By keeping hedging about 100 pips, 200 pips away is not the way of handling it. Because if it is hedged in one big rise and drop it, then you get struck. So when you want to use hedging, use it as a tight or an optimal hedging. That way you will be able to handle the situation very wisely and capitalize the market. Then Devangam. What do you mean by multi-year moves? See, multi-year levels are shown once in multi-years. Euro was shown as a multi-year high as 1.60 area, and GBP was shown around 2.11 as a multi-year levels highs in the year 2008. Now in 2011, you come across CHF has shown the multi-year low of 0.74, and yen, USD yen is shown 76 area. And Australian dollar 1.10 level. These are all the multi-year levels. Once in multi-years, such levels will come back. And they will remain for a few days and probably breaching it. Now, for example, gold, they are pushing it every day, $25, $30, and they are all multi-year moves. So, there is no great demand for gold, buying it at a very high rate and things like that. They do the circular trades and they know all the traders have taken sell position. And the strongest bear holding the sell position should lose the patience and do the covering of the short. Then afterwards the market will drop from such a loss. Then Robert, for small traders during this time frame, which kind of trade can we try for? As I explained, if you have the hedging facility, you can do it. And otherwise, you can continue to focus on Euro and GBP. You do either a buy and sell or a sell and buy trade. If you wait for a few days, you will be able to see profit. Then Robert, which currency could be less volatile in this time frame? Don't be afraid of Euro. They are not going to make a very big drop or a very big rise. And similarly, GBP about 300 to 400 pips, moves might be seen. So whenever there is a quick drop, you can buy. Whenever there is a quick rise, you can sell and you can wait. Because many people have got the tendency not to keep stop, and then it might be an ideal currency. But still, if you use hedging, you can really capitalize that market because they are not going to make any big moves in Euro and GBP. Then Arun. Can Australian dollar USD attempt upward move to 1.04 before further drop? See, anything they can do it, and so they have come up to 1.0150 and another 50 pips to high and hit the stops above. If somebody has taken a sell below that, saying that all the supports it has breached, and so we will take a sell, a technical sell, then got trapped and the stops are placed above that of the level 1.02, and probably they might try even that hit on that side also and then continue the drop. So they are not going to show any mercy to that of the short sellers or the long holders. So I do not want to commit levels. It is a question of thin volume market, and those who have committed positions will try to exit out of that, and fresh positions people may not take aggressively. And so in a thin volume condition, the volatility will be very, very big. And you know that from Monday and when Friday after the market, Saturday when the downgrade news was out and things like that, people really become panic and ask so many questions. But, you know, the agenda of the player is fixed, whatever be the news. You know that even Euro was downgraded that way, and you know what was the type of reaction. It will be kept in mind for about a few days, and afterwards it will be forgotten. The new news will take the prime slot. So in the same way, now US downgrade will also be in limelight for about 1 or 2 days. Then afterwards you'll come across, today FOMC meet is there, then the perception might vary. So that is the part of market, and the news and rumors, they continue to trigger the market, but ultimately what the intentions of the player is more important. That is why I focus on that and said that there are going to be big moves in the case of the commodities, and the sequential trend reversal is the process earlier I mentioned, and also there could be a possibility of shift in trading zone, and now it is happening. So even though I estimated it to happen last month, which has come end of last month, and it has come by early second week of this month. So there might be a delay because whatever the mathematical calculations you take, you always take into consideration the element of error, and also the forecast cannot be 100% at any given time, because the forecast is a forecast which is theoretically derived, and the actuals can vary from there. Nobody can deny it. Then Raj, his original forecast of second week of August, trend reversal still favored. When do you see this? Actually, Euro and GBP are expected to gain from second week, but at that time, we'll come across USDN and USD will also gain. But the gain will be only of over 200, 300 pips. Again, a drop will come. So that is going to be a wide range swings in the case of Euro and GBP, but a quick rise in the case of USDN and USD and also a rise in the case of USD Canadian dollar, and drop in the case of Australian dollar against USD. So it is a peculiar situation wherein you will come across the trend reversal in the case of the currencies which has already undergone the multi-year moves, that is Euro, GBP and Canadian dollar. The balance three currencies, USDN, USD and Australian dollar, they will be making the trending move. That is Australian dollar on the downside and CHF and Yen on the upside. They will be the trending move, and Euro and GBP will be making somewhat a higher level trending move to go up after the drop tomorrow. Then afterwards, they will continue to drop again to the touch the low and then go up. But next month you will come across more of USD gaining move as to bring in all to that of normalcy levels. What we have seen in 2002, those levels could be seen. 2002 to 2003, that levels could be seen. Then afterwards you will find market will make normal swings. Till this time you will come across that money pulling out of the market could happen. And you know that, I don't know, many people have still remember when I was giving that of the last time FOMC, last time FOMC meet, that I said that QE3 may not happen and they might go in for a selective support of the market. Because of that, lot of money will be pulled out of the market. And in that process, USD could gain. That I gave it in the last month or the month before. That sort of move, or in the month of May, I explained it. May and June. That is what expected to happen in the market. So what the money given to that of the banks and other situations in order to give the liquidity floating, and that could be absorbed back and given in a selective way. Because of that, all the money kept in different instruments, they will be pulled down and the profit will be realized, so that when the governments are in crisis, they earn the money from the other market with the help of the players, and they will be able to sustain. So these are all some of the secrets behind the government operations. So probably you have to withstand that, and that is the main reason that Australian dollar came down very drastically now. So if you think that it is next to impossible can become possible, that is a situation you will come across in the market. Then Matthew, shift in trading zone in Euro and GBP, can we see last year levels like 1. No. I said about 2003 levels. Euro will be trading around 1.40 or 38 level, and GBP around 1.5758 level, and then afterwards they will start gaining again. Then Able, sequential multi-year trend reversal in process. Commodity pairs yen crosses shift in trading zone as per your slide early in session. Yes, that's what expected to happen in the market. Now, I'm not able to understand, Able, what you are trying to ask, because you have put the statement there, and you have any doubt in that statement? Probably I'll just explain it more in the blog, then Bazaar. What are the normal levels for Euro and GBP? Yesterday in the blog also I have given it. 1.45 to 1.39 area could be that swing range in the case of Euro, and 1.65 to 1.59 could be in the case of GBP. Okay, now the Able has got a... Do you therefore expect USD to strengthen in coming months in spite of the S&P downgrade? Yes. The probable answer to that could be risk aversion. And what are your thoughts on the gold? Do you expect reversal? Yes. Now gold is making an upward move, and also USD CHF is making a downward move as a risk haven And then suddenly you will find that people will find that only USD is the safe currency to hold, because when it comes to the payments and things like that, they can't keep the money in different currencies and try to handle it. So all will come back to USD. So that is referred as risk aversion. Then money magnet. Why are the players making these big moves? It is not only the players, sir. It is how the scenario is. It is beyond the control of anybody for that matter. You know that is what I said, or I just thought about and did my research and found that why all the people in the world should think alike. Is it possible when two people discuss and you could come across suddenly controversy coming in, the arguments come in, and when such thing is a normal phenomenon among human beings, why all of a sudden you find all the people in the world think alike? So can anybody influence, or can Facebook or anything can influence people to join like that? And that can be a very limited factor. An extraneous factor has to influence, and only then all people can become panic, or all people can become bullish or bearish or whatever it is, we call it in market terms. So such type of sudden changes can be brought in only by an extraneous stimulus. And that extraneous stimulus happen to be the electromagnetic impulses coming from the other various planets. Then Anurag. What if they hold near the high towards the session start? Okay, when they come to that of the high, and you know that the initial high has been breached and Euro is holding above that, and GBP is also holding around that 1.6335. So there is a possibility, and as I explained, there will be a firming up move during the early European session and then slide and drop during that of the US session. So that could be the possibility. So when you find that the firming up happening in the market, try to take sell position. When the market is stagnant, just watch. Then show on. I'm late in the coming. Can you explain the hedging again, Euro USD? See, hedging, probably I explained elaborately in my trading system webinar how to use it. But since you are asked briefly, I'll tell you. So suppose if you take a sell position around that of the high, when the high has not been breached for more than 30 minutes, 40 to 45, and keep 30 pips above 40 to 75 a hedging order. And if the market quickly goes up and hedge it, and when the hedging making loss for about 10 to 30 minutes, you just close the hedging with a nominal loss and keep another hedging order 30 pips above the market and trail it down when the market starts coming, understanding during a brief upward stop and they filled it. Then if the hedging is making profit when the market continue to go to 1.43 and things like that, you just keep stop at entry in the hedging and wait for the market to settle, let it go up anywhere they want. You just keep stop at entry in the hedging and your original sell will remain, so you don't incur any loss. Still that money block is only 30 pips or 35 pips. And once the upward move is over, you know that if it is an intention move for 2 sessions and the early next session, if it is an extended move just for about 2 hours, then you find also the net change is about 150 pips, not going above that. Close the hedging with a profit, keep 30 pips above another hedging order, and then start trailing it down or take another sell position and close both the sell positions below their average. So I explained various strategies, but I'm just giving you 2 examples for you, so that way you will participate in the market either way. When the market is capable of making either way moves, you will be having the positions either way and you will try to handle it. For that, you need to understand the overall market. Then you will find hedging is not at all a constraint. But if you think that you are hedged and the market is in the middle, you become restless, and you cannot use it. It is a question of only perception. And suppose I am doing a sell and buy trade. Somebody in the market is doing a buy and sell trade. So what will be the mindset of a person who is having a buy and sell trade? What will be the perception of a person who is doing sell and buy trade? If both you are able to visualize then there are absolutely no problem in doing either way trades in the market, because there are only two types of traders. One has taken a buy and sell, another one taken a sell and buy. So if you are the one who is holding both the buy and sell as well as sell and buy, whichever the way market moves, you should be in a position to capture. Then money magnet. Okay, there is. Then Matthew. After and before FOMC moves in Euro and GBP. Euro and GBP are expected to make the slide after the FOMC meet today, and they may make a small pullback before that of the FOMC. And some people might avoid taking positions before the FOMC rate announcement, but there may not be any change in the rate. But there might be some statements, and that could be derived as a bullish statements, and they could make some drop in Euro and GBP after that FOMC. And tomorrow we could come across midweek drop also. Ravi, what do you mean by telling shift in trading zone? Probably you should go through the My Trading System webinar where I explained elaborately. From one range of 400, 500 pips trading, suddenly it shifts. Say for example, Australian dollar is trading around 1.04 to 1.07. It went up and came down. They are all referred as shift in trading zone, and they may not visit back again 1.10. Then is the time to build USD CHF long position. You can build it provided you have adequate equity. And so because in trading you go in for a leverage trading, so you have to take into consideration the money management also. If you try to build buy positions in USD CHF and they make about 100 pips drop because of over trading, you might see the margin threat. So avoid that and take less positions, and after keeping, say, suppose you are buying it at 1.7488, then afterwards the market moves and it has not come here, then keep stop at entry in that particular position. Take another buy position at 1.0723 and see 30 pips below, keep the hedging order. And once this position becomes profitable, you keep stop at entry. That way you can build positions, not simply every interest accumulating positions. That is over trading. Hope you are able to understand the difference. Okay. Then DDPT. What is your view on equity? Equity markets are expected to suffer in this particular month, sir. I have been telling it even from last month on. How much? Further down. Further down, I am not able to give the levels straight away for different markets at the moment. It basically shift in moves mean price reversals. Yeah, from higher to lower or lower to higher, that sort of moves. What can we expect in Euro GBP? Euro GBP has not gone for an extreme move. It could come to 0.84 area. And 0.78 is the final target in the case of Euro GBP. Been able. Hope this world webinar, yeah, it is recorded. It would be good to consider short. Yeah, you can probably you just analyze it and sell near that of the high set for the day. Then rupees. Do you expect Euro USD to gain, to go above 1 point? Not in the immediate future. Probably in the month of October, we could come across that sort of USD and, that sort of Euro and GBP gaining moves. 1.48 because they may watch. Taking the level is not important. The players are more focused now with regard to that of the denominator currencies and Australian dollar. They are trying to reverse it. So they keep Euro and GBP floating in order to create the market sentiment. They are making an upward move to create bullishness, downward move to create bearishness. When you were to watch the Euro and GBP, they raised Euro but dropped Australian dollar continuously. Nobody was able to explain it, but they were offloading. That is how they will just distract the traders. Then Rupal. When all the sell, they go higher and breach high of the year. Yeah, by year end we could be able to see Euro trading around 1.4849 level. But I am having trouble understanding what all the downgrade and let me not discuss more about these things, please, because this is how the world make estimates. People release the news at the appropriate time, so that can be used as a trigger in the market. So I do not want to go into the details and give the actuals, and that may lead to controversy. What would be the normal range of Australian dollar and New Zealand dollar? Australian dollar, I said that could go below that of the parity and could come to that of 0.88 and swing around that. And you know that Australian dollar started from that of 0.60 when the multi-year moves were seen in 2008. Probably they may settle down around 0.78 and 88 and that sort of range in the course of time, not immediately tomorrow. Please don't understand it wrongly. When they hit 88, that's what DPT, not immediately, they will settle down around those levels. It may take about a month or so. Next month, most likely, the regular market is expected to happen. Then, if your theory of electromagnetic effects on the planets being the factors that drive our behavior, don't you think that you are trading the path of astrology? Astrology is something different from that of astrophysics. I think many people have misunderstood. Astrology is pertaining to that of the planetary positions. Electromagnetic impulses variations is a totally physical process, and they trigger the endocrine glands of the human, and because of that the human being's emotions shoot up. So astrology is pertaining to that of what are the positions of the planets and what could be the influence of the one individuals and things like that, or the entire globe or a country and things like that. They are all nothing but based on the past experience. So in the past, when such positions were there, what was seen? So that could be repeated, but you know that history repeats in a modified form. Even though history repeats, but in a modified form. And that modification, it fails to explain. That is why many people do not accept astrology as a science. Whereas this is totally different. Astrophysics is totally different. It is a physical calculations measuring the electromagnetic impulses on the endocrine system of humans. Who don't measure the electromagnetic rays but assume, yeah, that is what. See, assumption is something different. In science, we don't go in for assumptions. We go in for the proof. Then able. It has been quite a while. You hold a special webinar for forecast on currency trading. Thank you. And I'll be regular here afterwards. Do you expect your gold to go? Gold might reach about 1,500, 800 and then start making an excellent reverse. Able is the time what level USD, and I explained that in the course of time, you might come across USDN coming to that of 100 area, like previous occasions, and also Australian dollar above that of the parity. As you have seen in the case of, USD CHF above that of the parity. But if you come across another 100 pips drop, don't blame me, please, because they are all calculated explanations and actuals can vary. Do you expect USD CAD to reach 1.10314 end of this month? By end of next month, we should be able to see the normal levels. Theoretically, what is the normal range of USDN? USDN was trading for a long time above 100. You know that. They will come back to that. When do you see USDN reaching 100 again? Yeah, that is what, by mostly next week or so. Let us hope for the best and trade carefully. That's what I can suggest. And keep these information in our mind, probably to pursue the market with the right spirit. But don't use it as a straight trading ideas and start taking sell positions in abundant quantity and without money management lose your account and start yelling at me in the blog and things like that. It doesn't help you, it doesn't help me. Please understand these are all nothing but the guiding factors, and I expect everybody to do their own calculations and estimate the right market perception. That is more important for us. So the expected market moves, Japanese session swing and slide move, then a quick firming up during European session and then slide. Your session could come across a drop during that of the FOMC. rate decision time. Then it is a sequential multi-year trend reversal process, and first commodity pairs are reversed and yen crosses automated and then majors, then finally European crosses. So it will take about 1 or 2 months to get completed. And during that process, some of the currencies, especially those with those currencies shown multi-year levels, could show trend shift in trading zone. I will give more information in the blog. So as far as the initial lows and the highs, Euro breached the high, GBP breached the high. So they could make upward move in order to create a bullish feel. And USD CHF and USD yen, they are making swings between the high and the low, not breaching the low or the high. And Australian dollar, it has gained very quickly to closer to the high. See, such a big move. They have done it from 1.02 to 0.99 and again to 1.02. That is the level of volatility you find in the market. So, small traders, you have to be very careful. Only with the hedging you will be able to make either way profit. Again, Australian dollar, they will take it to the below parity by tomorrow and then make further drop. And even Euro and GBP are rising on Thursday and Friday. Then Canadian dollar, it has not breached the high or the low as expected, as shown that Euro, GBP and Canadian dollar are in the range, or going to be in the range, whereas the denominator currencies CHF, yen and Australian dollar, they are expected to make very aggressive shift in trading zone. So I take this opportunity to thank everybody and also FX Trade for the patience and understanding of my preoccupation and continuation of the Asian Sessional Live Market Analysis webinars. So here afterwards, I'll be giving it on a daily basis. So sorry for the inconvenience caused during the last week. Thank you one and all. See you again tomorrow.